them answered over the show, and we have a whole host of experts joining us for exactly that. Rajesh Agarwal, Head of Research at AUM Capital, is now joining us. Kunal Bothra will also be joining us in just a bit. Rajesh, thank you so much for taking your time out and joining us here on ET Now. And we already have a whole host of queries that have already started coming in. First question is on Coal India. We have Subrata Mukherjee, who has written to us from Kolkata. She says she wants to buy Coal India shares, and of course we had some news with respect to listing of its subsidiaries, but tell us what will your view be on Coal India at the current price juncture?
Good morning, Ashisha. Good morning, Cheryl. As far as Coal India is concerned, we are very bullish on that, and we have come out with a report on that too. It's a strong company with the largest reserve of coal across the world. Everything is doing well. Thermal power is doing well. The power demand is increasing day by day, and for that, coal demand is also increasing. The optics has been great, and the best part is it gives out good dividend. Dividend yield is also great. I think for a long-term horizon, maybe in the short term it won't perform because it's a low beta stock, but for a medium to long term, maybe 12 to 18 months time horizon, one can easily accept a return of maybe 15 to 18% from the current market price. So if somebody is ready to hold for that kind of time horizon, I would be a buy.
Coming in on Coal India, let's move on. Let's take the next query then. We also have Kunal joining us this morning. Good morning to you, Kunal. Good morning, Rajesh, as well. And let me take this next query. It's coming in from Swachalam, who's writing to us from Hyderabad. Wants to know about diversification of the portfolio. He's saying that I want to diversify to other industries by selling about 150 shares of HDFC Bank, which he bought at around 1,940 rupees per share. Oh, sorry. So basically what he's saying is he has some 1,940 is the buy price for HDFC Bank. He wants to know whether it's prudent idea to go ahead and diversify out of this and instead look to go ahead and park his money in some other counter right now. Rajesh, what's your take? Do you think it makes sense diversifying out of HDFC Bank right now? I think he has 3,000 shares of it.
See, diversifying a portfolio is a very good idea, but selling HDFC Bank for something else without any reason won't be that good, I would say. HDFC Bank has been doing well. The numbers have been good after the merger. It has become one of the largest one of the largest across the world. The NIMs have been good, and going forward with RBI cutting rates 2 times already done, and we expect another rate cut coming soon. So banks are going to do well, and the best part is we expect HDFC Bank to report a profit of around 80,000 odd crores in FY26, and that's the kind of performance. It's a buy from our side, rather sticking out of this HDFC Bank just for the sake of diversifying to other something is not that great idea. In fact, I would say if you have extra funds, you can even add at these levels.
Actually go back to that query because I got confused when I read the query. He was saying that he has 3,300 shares of HDFC Bank. Out of that 150 shares, he wants to now sell at the current market price. His buy price was 275 rupees per share, and I have no idea when HDFC Bank was around that price. It could be a while ago. So, which means considering that he's been holding on to this counter for the long term, has a good lump sum amount also in terms of the shareholding over here. So, you still hold the view that no need of diversifying, stay put with this one, no need of looking at selling a tad bit amount of those shares?
See, if you have tried to sell only 150 shares out of the entire holding, then you can go ahead and buy some hotel stock. For example, ITC Hotels looks very good. So you can switch your money to there. But still, I would concur with my view that one should go remain long in HDFC Bank. But if you are keen on selling 150, moving to some other sector, ITC Hotels would be a good pick.
That's the view coming in on HDFC Bank. But we have Krishna who has written to us from Chennai. He's holding 250 shares of Quest Corp at an average price of 359.7 rupees per share. And Kunal, this question is for you. The share is on a downward trend, is what he's saying. And he's asking whether he should continue holding for a recovery or would you advise him to sell out of this position? So Quest Corp, what will your view be, Kunal?
First of all, so my view on Questcorp is, of course, on the negative side, the stock has been correcting. I think even at current levels, the charts are a tad bit more weak for Questcorp. It's fallen below the 200 moving average yet again this time around. So I believe that there could be a chance that the stock may drift lower in the near term. I would suggest an exit.
All right, so that's an exit call coming in for Quest Corp. We have this next query from a viewer, Harish, who's writing to us from Mumbai. And he's saying based on the earnings, he exited from Masgon Dock. About 50 shares is what he was holding. He did not say at what price or whether he sold it at a loss or so. But Kunal, now he has some funds with him and he wants to invest in a counter. Which one would it be?
So I think there are a lot of opportunities over here currently. For example, Bharat Forge is something which starts to look attractive at current levels. You have Paytm, the stock after, I think if I'm not wrong, almost like 6 months or 7 months, the stock has confirmed a breakout of a major resistance. So which means we could be looking at a cusp of a new breakout into Paytm as well. You have a lot of infra stocks, the likes of Cummins, for example, that stock has confirmed a classical breakout. I think 3200, 3250 was the 200-day moving average for Cummins. That stock has confirmed a breakout above those levels. So it depends on, if you're looking to just about alter the beta slightly and look at, slight bit of more mid-cap names, then these are the three names which I would suggest.
That's the view coming in on Cummins India. But we have K. Nageshwara Rao, who has written to us from Vishakhapatnam. He's asking for a view on Biocon. He purchased about 100 shares at 363 rupees per share. Rajesh, what will your view be on Biocon?
See, this is a kind of counter which one has to hold for a very long period of time because the numbers have been not that great in the last few quarters or so. But the fact remains they have good product pipeline and going forward if something is approved from the US FDA and other things, even their biologics is doing very well. So if you are ready to hold for a pretty long period of time, maybe 18 months, 24 months, then only you can hold. Otherwise, at around 350, 360 odd rupees, I will say try to book out.
All right, so that's the take coming in on Biocon. The next query, Kunal, is on Blue Star. Prasad from Hyderabad is writing to us. 85 shares of Blue Star is what he has at a price of 1,582 rupees per share. He wants to hold it for a year or so, but would it be an advisable move for him to do that, Kunal?
Not really. Again, a stock which has been grinding lower, even in the last 2-3 months, where the markets have picked up pace. That stock has been one of the few names which have been consistently grinding lower, and this indicates that the major rally which had happened for Blue Star in the last 7-8 years, 10 years, I think that major rally could be at question for the stock in the next couple of quarters. So at least for the next 3-6 months, I would actually expect the stock to drift lower or maybe not participate in the strong market up moves. So I think in that aspect, it could be a stock which you can look to exit.
Blue Star, but we have Bharatwaj who has written to us from Coimbatore and he is holding about 2,700 shares of Tata Steel at an average price of 112 and he is asking whether he can buy at the current market price, but he clearly has a long-term time horizon of 3 to 5 years. So Rajesh, this question will be for you. What is your view on the steel major?
See, one of the largest in terms of capacity doing very well. The only thing is their foreign operations. And if you're trying to hold for such a long period of time, I think one can go long on this. Not only this, but the other steel players like a Jindal Steel and Power or SAIL are also a good bet. Considering the fact that the government's focus on infrastructure development, real estate doing well, I think steel sector as a whole is going to do well in the longer term. So it's a buy from a side. Not only Tata Steel, but even Jindal Steel and SAIL.
All right, so that's the take coming in on Tata Steel and also the entire steel pack. This one is coming from Rohit. He's a long-term investor and he wants to know, given the fact that he's a long-term investor, does it make sense to buy EIH as well as Power Grid? I'm not sure which EIH is he asking about, but nevertheless, Rajesh, on both of it as well as on Power Grid.
The hotel sector as such is going to do well because of the kind of demand uptick which we have been witnessing since COVID. Average room rent has gone up, inventory has not gone up that way, and EIH as an hotel is doing very well. I think one can go long on EIH. Even other hotels, just I mentioned ITC hotels that can also be considered. As far as Power Grid is concerned, it's a indirect play on a power sector. I would say they provide great services to the entire power producers, and the numbers have been quite satisfactory. I would say the best part is it gives out good dividend. So if you are keen on paying the dividend play, Power Grid, REC, PFC, these kind of stocks, it can be a good bet.
Okay, so that's the view on Power Grid and a couple of other hotel and hospitality companies. But let's also put the spotlight on a couple of pharma companies, the Natco Pharma, and we have Radhakrishnan Chennai who has written to us. He says he's making a loss of about 25% in his holding in Natco Pharma. He's asking whether he can average or add for a period of 1 year. Kunal, what will your view be on Natco Pharma?
I would suggest an exit, not to add the stock at current levels. The stock has been into a downtrend. Still looks like a stock which is weak on the charts. Even the last 5-6 months, the stock has just been consolidating after a major correction. It had shown, I think, in Jan of Feb 2025. Post that a 300-400 point drop, the stock has been unable to find any kind of a momentum back again. So, an exit from my side.
All right, so that's an exit coming in for Natco Pharma. Let me come back to you, Kunal, because this one is coming from Gautam, who's writing to us from Mumbai. And he wants to know about Coal India and Hindustan Copper. Between these two technically, which looks good for an investment for a period of about 6 to 12 months? Or if not both of these counters, which other stock do you think looks good in the metals, the mines in the mineral segment?
See, it's a good comparison. Since you're being very specific about the time frame, which is just about 1 year, then I think keeping that in mind, and of course with the slight assumption that you're looking at a risk appetite of a slight high beta stock, I think in that aspect, Hindustan Copper is something which I would suggest could be an interesting bet. But maybe not buy at the current levels. I think what the stock has been showing in the last 2-3 days, that it's just about likely to go into a grind. Maybe that 235 to 40 range could be a much more better range. If you happen to see that kind of a trading band for Hindustan Copper, that could be a zone where you can look to buy. Coal India, I think, could be a very good stock, but I think the time frame of 6 months, 1 year may not be a great enough time frame for the stock to do any kind of a major uptick. So unless your time frame is long term, I would suggest Hindustan Copper out of the two.
Okay, so Hindustan Copper and Coal India, that's the technical view coming in on both these stocks. But we have Indu, and she has a technical query specifically for Kunal. How are Manappuram and Muthoot Finance looking for short to medium term for fresh entry? That's her question. So Manappuram and Muthoot Finance, Kunal, what will your view be?
So again, I think both of these stocks, they look attractive. Manappuram specifically after this, I think breakout which was seen on Monday or last week Friday, I'm not sure of the exact day, but I think the last 3-4 days there was a very strong price volume breakout for Manappuram Finance. That stock looks attractive. 225 could be a decent range if you happen to see the stock back again into that trading band. This could be a good neutral point for you to buy Manappuram Finance. Muthoot, I would be a bit circumspect because when I look at the charts for Muthoot Finance, it still doesn't look like that the stock is getting into any kind of a major momentum uptick. There are a few days when the stock does well. Post that, the stock just about languishes or trades in a very consolidative kind of a band. So avoid on Muthoot Finance, but Manappuram close to 225 to 30 range could be a good buy.
Coming in on both of those gold loan financiers. Let's move on. Then let me take this query. Actually, it's for you once again, Kunal, but let me give you a break. Let me take this query coming from Thomas George. He's writing to us from Kochi. He wants to know about Federal Bank, Rajesh. He has about 20,000 shares of Federal Bank that he's purchased at the levels of about 180 rupees per share. What to do now is what he's asking. What's your take coming in on Federal Bank? Do you think this one stands out when you talk about the entire private banking space? A good play to actually look at, especially in the mid-tier?
See, in the mid-tier private sector banking space, I think Federal Bank is a good pick. Not only in the banking side, it's doing very well. It's doing very well in the gold loan side too. Uh, that's an added advantage. Numbers have been pretty good. NIMs have gone up. Advances have gone up. And quarter and quarter, we have seen the bank giving out good numbers. So even at these levels, I think there is almost 15 to 20% upside left in the next 12 to 18 months. So one can hold to the stock, add on dips. That would be the call.
Dips, and we could say 15 to 20% upside on Federal Bank. That's the view coming in, but we need to slip into a very short break on that note. We'll try and answer many more queries on the other side of the break. Don't go anywhere. Welcome back. You're still tuned in to Buy Now, Sell Now, and this is a show where we answer all your stock-specific related queries. So keep sending them to us, and we'll try to answer as many as we can over the course of the next 1 hour. But let's get going then. We have Satya, who has written to us. She's holding some shares of Aditya Birla Fashion and Retail at the price of 180 rupees per share. She says she's a long-term investor and she wants to add positions to Aditya Birla Fashion and Retail. Rajesh, what will your view be on the stock, especially after the recent corporate adjustment that we saw?
See, I think it's still a sell from a side because the numbers have been not that great. Even after the corporate adjustment, we are not very excited about the stock. The margins have been under pressure. Oh, yes, they have some good brands going for them, but the numbers are not showing that. Instead, I would say go long on trend for that matter, being in the same industry, doing very well and corrected quite a lot from the recent highs. I think that would be a better choice out of these two.
All right, so that is the take coming in on ABFRL, and Jeff, there was a corporate announcement, so that's the reason why you've seen that sort of an adjustment in the stock price. Let me move on to the next query then. This one is coming in from Smita Vikram, who wants to know about MCX. She's bought about 50 shares of MCX at a buy price of around 6,291 rupees per share. Wants a short-term view. Kunal, does it make sense to actually go ahead and book profits or continue to hold on to MCX?
I think it makes sense to start booking out profits over here for MCX because it just looks like that on the monthly charts, rather weekly and the monthly charts, the indicators are getting into a tad bit overbought territory for MCX. So maybe that could be one of the concerns, which could lead into a swift another 200, 250 point kind of a correction. So I'm assuming that you're looking at this from a trading angle. I would suggest a book profit at current levels and then wait out for dips. At least 3 to 4 percentage points drop into the stock price. That could be a point where you may look to re-enter.
On MCX, but we have a query that has come in. He has not mentioned his name or anything, but he has 5,000 shares of IOC at 153 rupees per share, about 1,000 shares of BPCL at 346 and some shares of HPCL as well. He's asking whether he should continue holding, sell or average out on this position, and he's clearly mentioned that he's a long-term investor. Rajesh, what will your view be on IOC, BPCL, HPCL, all of these oil marketing companies?
See, first let's talk about the sector. The entire OMC pack is looking very good. Just because of the fact that crude has been trading below $70 from such a long period of time, and that's good news for the OMC pack. Secondly, OPEC Plus has announced that they are going to increase 4 lakh plus barrels per day of output from July onwards. That again would put pressure on crude. Unless some geopolitical tensions which are going up across the world flares up like anything, I don't think crude is going to flare up and is going to trade below 70 for a pretty long period of time. Technically also it's trading at almost all moving averages. So all these factors are very good news for the entire OMC space. Now this investor has a whole lot of exposure in OMCs. All three stocks are OMC. That's a concentration risk, I would say. Instead, try to consolidate into any two of them, out of which I would suggest going long on IOC and BPCL and consolidate the amount of HPCL in these two only, because you have good lot of exposure in all three of them. So why not in one or two stocks? I would say go long on IOC. That's the best one in the entire pack. The valuations are good. Dividend yield is good, doing very well. Even the LPG losses, which were there since a very long period of time, is going to be going down in these quarters, coming quarters, I would say. So this is my pick. IOC is the best one. And just because you are holding all three of them, try to exit one or two.
All right, so that's a take coming in on these OMCs. Let me take this next query then, and this one is coming in from KB Rao, is writing to us from Hyderabad, and he wants to know about PCBL, Kunal. 404 is the buy price, 200 shares of PCBL. Wants a 6-month to 1-year view on this one.
See, it's an interesting chart. I've looked at the stock and tracked the stock over the last couple of years specifically. There was a point when the stock had done exceptionally well, I think 2024 mid, where it went up to 500, 550 kind of a range. And now the stock has gone through a correction. But I think since you purchased at a good price of 400 thereabouts, the stock is at 420-ish at current levels, trading just marginally below the 200-day moving average, if I'm not wrong. And I think also on the short-term charts, it looks like there could be a further continuation of momentum for PCBL on the upside. So I would suggest just hold on to the stock as of now. Keep a decent kind of a trailing stop loss. Maybe keep a trailing stop loss of 388, 390 for the stock. Look out for targets at least in the range of 440 to 450 on PCBL over the next 1 to 3 months.
AV Ramana has written to us from Hyderabad, holding 2,000 shares of Eternal or Zomato as we all know it. 227 is the buy price, and he's asking for a 1-year target, both fundamental and technical view. But Rajesh, let me come to you first. What will your fundamental view on Zomato or Eternal be?
Exit. The numbers have been very poor from the last 2 quarters. And I don't find any reason to believe that the numbers are going to be anything good in the coming few quarters or so, because they are focusing more on expanding dark stores, and that's eating out the margins. Even in the Q-commerce space, competition has gone up like anything. Be it Zepto, be it Instamart, even Reliance is coming into Q-commerce. So intensified competition, low margins. I would say it's better to exit from this.
Better to exit from Zomato. Competition seems to be intensifying. Margins are low, and results in the earnings gone by were also not very strong. But Kunal, what will your view be on the technicals?
Yeah, even I'll suggest an exit. I think it's more of a trading stock. The best time to try and trade the stock would be into a band. 225 is a support, 240 as a resistance. Currently, the stock is closer to a resistance. So I think when I look at the charts for the short-term aspect for Zomato, nothing exciting. I would suggest an exit.
It's coming from Achar. He's writing to us in Madurai, and he's of 51 years of age is what he's mentioned, and he said that he's a big fan of you, Kunal, as well as Rajesh and the entire show. And Kunal, he's asking 2 queries from you. One is RVNL. He's holding about 1,100 shares at a price of 476. And the other one is Cochin Shipyard, 90 shares at a price of 1,621. For RVNL, he is asking, does it make sense for him to average? While talking about Cochin Shipyard, he's asking whether he should go ahead and exit. So what's your take on this?
No, I think I would suggest that you can look to average RVNL as well as hold on to Cochin Shipyard and no need to sell. It's always understood that there are times when stocks run up speedily high. But then when you look at this in the context of what happened to Cochin Shipyard, the stock fell from 3,000, 3,500 levels to 1,200 or 1,300 kind of a mark. There was a very sharp correction which had happened for Cochin Shipyard. The stock had fallen more than 50% in the span of the last 6-8 months. Now we are seeing a resurrective move on the upside. Give it some more time. There would be phases where these stocks would move up higher speedily and then also go into a sharper correction. But then if the long-term trend is intact on the upside, I believe that these stocks, they generally do pretty well and they reward the investors on the long-term perspective. So hold on Cochin Shipyard. RVNL, you can look to add or average at current levels.
Okay, so that's the view on Cochin Shipyard and RVNL, but we have a query that has come in from Muscat. Pratiksha has written to us. She wants to invest in the FMCG sector for a period and a time horizon of 1 to 2 years. She's asking for a suggestion on 2 stocks from the FMCG sector with a strong outlook fundamentally. Rajesh, what will your view be on the sector as a whole, and if you had to pick 2 stocks, which one will those be?
First one would be ITC. The numbers have been good, balance sheet strong, doing very well. Cigarette volumes have gone up. FMCG division is doing well. So ITC would be the first one. And the second one would be Hindustan Unilever. It has been languishing since a very long period of time. Now, things are started moving in a positive way. I think the kind of demand growth in the rural which we are expecting is going to do well. They have even announced a demerger of their ice cream business. So things are looking good at HUL also. So these two would be the top picks from FMCG space.
Big smile that I saw on Rajesh's face with the moment he said ITC. It's a given that that's one of his top favorite stock when you talk about in the FMCG space. But moving on then, it's time for a break on this edition of Buy Now, Sell Now. But at the beginning of the month often marks key financial activities. You have your salary credits, bill payments, as well as planning expenses. But just as we plan for our expenses, it's equally important to plan for our investments. And to encourage this habit, SBI Mutual Fund, in collaboration with the Times Network, is launching a nationwide investor awareness initiative, Bharat Nivesh, Behtar Nivesh, Behtar Kal. The objective of this initiative is to promote the habit of consistent investing among Indians, helping them secure their financial future. And as part of the campaign, we are observing 4th of every month as a monthly reminder to ensure that you start your mutual fund SIP or ensure your existing SIP continues. So go on and set the reminder to invest consistently and stay committed to your goals for the financial well-being of you as well as your loved ones.
Welcome back. You're still tuned into Buy Now, Sell Now, a show where we try to answer all your queries. So keep sending them to us. And we have Rajesh and Kunal here with us to answer all your queries today. We have Satish Tombre, who has written to us from Pune. He's a senior citizen. He bought some shares of Asian Paints at an average price of 3,000 rupees per share. He's asking whether he should continue holding these shares or sell them out at the current levels. Medium term is the time horizon that he has mentioned. So Asian Paints, Rajesh, what will your view be on this paint company?
See, Asian Paints, once a darling of the entire market, has been ranked underperformer, I would say, for the last so many quarters. The numbers have been pretty bad, despite the fact that the crude is rolling at less than 70 odd dollars. We don't find any excitement in the entire paint sector itself. And the fact remains the competition is heading up. The builders have entered, GSW has entered, Astral has entered, and everybody is into paints now. And the old days, I don't think they are going to come back very soon. So it's better to switch from Asian Paints to some other sector, maybe a hotel sector or FMCG. Even fertilizers would be a better choice.
All right, so that's the take coming in on Asian Paints. Let me take this next query then. And the next query that I have is coming in from Nikunj Podar, and he wants to know, Kunal, BHEL June 270 call option at 12.1 is what he's bought. Should he continue to hold or exit?
I'm not sure the current market price of the call, but 270 is a bit of a tough task for BHEL over the near term. You have to look at it this way, that over the last 3 months, the stock has already risen from 200. I think 185 was the low for BHEL. It's come back to 260, 265 kind of a mark. So after this 3 months kind of a steep uptrend, there is a possibility that the stock may just about drift a little bit more lower. So 270 could be a bit off the mark for BHEL. I would suggest that if in case the stock drifts down and say comes back to 250 mark or 260, 250 or 245 thereabouts, then shift the call option from 270 to maybe a 250 at the money strikes for BHEL.
Okay, so that's the view on BHEL, but we have Abhimanyu Kohli, who has written to us from New Delhi. He's holding 150 shares of PVR Inox at an average price of 1375 rupees per share. He says he's been holding them for more than a few years now, and he's asking whether he should stay invested in PVR Inox. Rajesh, what will your fundamental view be on this company?
It's the largest multiplex player in the country with whole number of screens. They are moving into new screens, closing the loss-making one, trying to do everything. But the fact remains the margins are under pressure. Footfalls are down just because of OTT presence and plus the high ticket prices. So these things are going against it. But at these current levels, I think around 1,000 odd levels and the kind of lineup of new releases in the next 6 months or so, I think it can move to around 1,200, 1,250 in the next 6 months. So that would be my target. Hold at this point of time. try to book out at around 1200 in the next 6 months.
So this one is the next query that's coming in is coming in from Jacob. He's writing to us from UAE. He wants to know about three stocks: Tata Power, Ambuja Cements, and NTPC. Are they fundamentally strong with good prospects in the long term for investment, for about retirement? Is what he's asking. Any buy price, or can they be bought at current levels? No points for guessing, Rajesh. You believe that these counters are good? I'm not sure about Ambuja Cements, how the dynamics have changed, but Tata Power, NTPC, what's your take?
You said it right, Cheryl. Tata Power and NTPC, no second thoughts. They are good for long term. Don't wait for any price points since you are looking these for retirement purpose that I assume maybe a lot of years down the line. So start accumulating these stocks. If not at a lump sum, start accumulating in a SIP way every month. Accumulate some stock of NTPC and Tata Power and stay put into them. As far as Ambuja is concerned, yes, of course, after the dynamics have changed, a lot of things have changed. But I would prefer going, we are bullish on the cement pack as a whole, but I would prefer going with Ultratech at this point of time, even for a long-term horizon because of the kind of capacity it has, with the kind of distribution reach it has, with the kind of pricing premium it has. I think Ultratech is a better choice between Ambuja and Ultratech.
Okay, so that's the view on Ultratech and the entire cement pack and several other stocks that we discussed. But we have Jacob, we have Anil Malhotra, who has written to us from Delhi. He's holding about 3,430 shares of Reliance Industries at an average price of 785 rupees per share. He's asking the best price at which he should sell the entire quantity, and he's willing to wait for a period of 6 months. So with a 6-month time frame, what will your view be, Kunal, on Reliance Industries?
I would suggest a hold, and with a 6 month time frame, I think maybe closer to 1460, 1520 could be a target range which you can eye for Reliance Industries. But again, I think since you purchased at such lower prices, I don't see any reason why you should be looking to exit the stock unless you have something else which could be as good as a quality for the markets like Reliance Industries. I think only then I would suggest to make that switch. Otherwise, if you're looking at this at just a short-term play, then I would suggest 1460 to 1520 as a target range for Reliance Industries over the next 6 months. That's where you can look to exit.
All right, so that's the take coming in on Reliance Industries. This one is from Kusuma, writing to us from Pune. Jindal Steel and Power, 15 shares at a price of 930 rupees per share. Kunal, what's the 1 month outlook for this one? Should she hold for the next 1 month, or any alternate stock which can give her 10% upside in the next 1 month?
It's possible that Jindal Steel and Power could, surprise move on the upside. I think the stock has been doing pretty well, except for the news flow, I think, which has been going on for the metal counters over the last few days, where there's been some bit of added volatility. I would believe that the stock looks quite attractive. I would suggest a hold.
Okay, so Jindal Steel hold rating coming in from Kunal, but we have Dixon Technology in the spotlight next, and Anita, who has written to us from Pune. She's holding some shares which were bought at 15,735 rupees per share. She's asking whether she should continue holding this position or sell out. Kunal, what will your view be on Dixon Tech?
I'll suggest to exit Dixon Tech. I think the charts for the stock is weakening. By the day, even on the short-term charts, there is a bearish crossover which has happened. The 50 DMA is crossed below the 200-day moving average, and it still looks like that the stock is getting weak on the charts. The drift down for the stock after the breakout, I think, is a more concerning nature for the stock price. I would suggest an exit.
All right, so that's the take coming on Dixon Tech. It's an exit coming in for Kunal. Balkrishnan is writing to us from Chennai, wants to know whether he should buy Nalco or Hindalco from the long-term perspective. And, surprisingly today, we've got a lot of queries coming in for the metal pack in particular. Rajesh, now the choice between Nalco and Hindalco, which one would you go for?
Both are good stocks, no doubt on that, doing very well. For Nalco, at least the dividend yield is very good. But given a choice to hold for a long term, I would prefer going with Hindalco, because not only the domestic operations, but even the international numbers, the foreign subsidiaries this time has come to good. At these levels, I think there are a lot of upside going ahead. So maybe somebody is willing to hold for a 1 year time horizon or maybe more. It's a good buy.
Okay, so that's the view on Nalco and Hindalco, but we have Vinita who has written to us from Sydney. Good. Cheryl, we have viewers from across the globe, isn't it? We have Vinita who has written to us from Sydney, Australia. She says she has purchased about 500 shares of IDFC First Bank at a price of 77 rupees per share. She's a long-term investor. So Rajesh, what will your view be? And she's asking whether she can add more in this particular holding. So IDFC First Bank, what will your view be?
There are two things. One, the numbers have been improving with the new management. Things have improved. But what I feel is the entire positives has already been discounted in the price, and any meaningful upside from these levels would require quite a lot of jump on the bottom line or the margins or some corporate action that's not expected in the near future. It's better to switch from IDFC First Bank to better names like Kotak Mahindra and Axis, even HDFC, which is the best, I would say, in the private sector space. In the PSU basket, you have the likes of Bank of Maharashtra, where the numbers have been very good from the last 2-3 quarters or so. So these are some of the choices in the banking space which I would prefer rather than going for IDFC First Bank.
Right. In fact, while we are talking about banking space, then let me take this query coming in from our viewer who's N. Gopalakrishnan. He's writing to us from Trichy and he wants to know about Indian Bank. 1,250 shares at an average price of 413 rupees per share. Can he go ahead and buy some more of this once the stock comes down a bit? Kunal, what's your take on Indian Bank?
Well, I think yes. I think it's a brilliant stock. I've seen the charts for Indian Bank. I've been tracking this name over the last few days. Specifically at a point when the stock start to get back into that zone of a major breakout. I would suggest that it's a good stock where you should look to add on dips.
To add on dips, that's the view coming in on Indian Bank. But we have K. Narayana Reddy who has written to us. He's holding about 100 shares of Garden Reach Shipbuilders at an average price of 1,500 rupees per share, and he's asking for a 1 month target. So Kunal, what will your view be on Garden Reach, especially after the solid run up that we have seen in all of these defense and shipbuilding stocks?
See, that's exactly the point. That these stocks are run up so swift and fast in the very short term, that trying to catch the stock at current levels would probably not be a great strategy. So I would suggest that if you're looking to buy the stock, then I would suggest for a decent correction to come by, just be little bit more patient. The correction could probably happen in the next few weeks or maybe in the next couple of months, but that could be a decent time frame where you can look to add or average further. On the upside, I think looking at the recent momentum for the stock, I would suggest that maybe 3,150, 3,250 could be a near-term cap for the stock for GRSE.
All right, so that's the take coming in on Garden Reach. Let me take this next query, and this one is coming in from Subramaniam, who is writing to us from Chennai, and he wants to know about RCF. 50 shares at an average price of around 142.3 rupees per share. Wants to know whether he can sell at these levels or hold on to this for some time. It's been a while actually. We've taken a query on RCF. Kunal, what's your take on RCF? What should he do? He's in the money in this one.
See, it's a good breakout day for stocks like RCF today on the back of significantly higher volumes. But when I look at the charts, there is a sense that maybe the stock is just about heading towards a resistance move around the 165 band. I think at current levels, I would suggest to book profits. Because after such kind of a move, single day sharp uptick move, generally we've seen that the stock fizzles out and it tries to come back to the starting point of the recent rally. That could be a point again where you may consider to buy the stock on the lower side. So as of now, at 160 to 165 levels, I would suggest to book profits on RCF.
You should book profits on RCF. That's the view coming. We did talk about a couple of aluminium players, Nalco and Hindalco, and we now have a question that has come in on a mining player, NMDC. Vijaya Kirti has written to us from Chennai. She is holding about 3,000 shares of NMDC, bought at 91 rupees per share, and currently she is sitting with some amount of losses. She is asking for the prospects on the company with a 3-month time horizon. So Kunal, on the technicals, what will your view be on NMDC? The stock currently is at 72 odd levels.
It's an attractive chart. I am very bullish on NMDC. My sense is that even with the recent disappointment in terms of results when the stock drifted a little bit more lower, I think it's an excellent chart. I would definitely suggest to hold on to the stock, but maybe 3 months could not be a great time frame. You might have to go into an extension of the time frame, and if that's the case, I would be looking out for a target somewhere in the range of 85 to 95 for the stock if you can extend your time frame.
So that's the take coming in on NMDC. This one is coming in from K. Himawati, who's writing to us from Warangal, wants to know about Paytm. 600 shares at a price of 880 rupees per share. At what rate should she book profit? Sorry, Rajesh, I'll come to you to get your view on Paytm. But Kunal, first let me get your view on the technicals. What level should she book profits?
In the last couple of days when the stock was sub 900, it looked quite ripe for a breakout. That breakout has happened for Paytm. I think the stock should be good for at least 1,000 plus in the near term. So there could be a bit of a correction prior to that, but then if you can hold on to the stock, say for the next 3-4 weeks or a couple of months, I believe 1,000 plus could be a target which you can eye on Paytm.
1,000 plus target one can eye for Paytm. Rajesh, what's your view on the fundamentals for Paytm? Because this one's earnings were not that bad, isn't it?
See, you said it right now. Earnings were not that bad, but that were not good either. So I won't be very excited about holding Paytm for a long-term portfolio. It's in a momentum right now, and it might go to 1,000 odd levels, as Kunal said. But that's basically my point. It's a trading bet, I would say. For fundamentals, they are better companies in the entire universe. So maybe if you want to go in NBFC, Geo would be a better choice, or even Poonawalla. So Paytm at best can be a trading bet. Try to exit at higher levels. The numbers have been improved, but that are not exciting. The competitions are very high. So it's better to be in a strong player.
Okay, so that's the view coming in on Paytm. Rajesh and Kunal, thank you so much for taking your time out and joining us here on ET Now and answering all our queries. But that's all the time we have on this edition of the show. Keep sending all your queries. We'll try and answer them tomorrow. But that's all the time. Stay tuned to ET Now. Markets at noon will take all the market action forward. Stay tuned.